Welcome back to another edition of the RRAR interview series. Our guest today is Cedric Burke. He's the Senior Vice President at Cross Country Mortgage. RRAR is proud to have Cedric and Cross Country as this year's sponsor for the Government and Political Issues Committee, aka GPIC. And if you've been to some of our events, you've seen Cedric and his team talk with members or work a table, sharing information about the services that Cross Country Mortgage offers. Cedric, welcome.
Thank you. Glad to be here.
Yeah, we're happy to have you. So let's start, Cedric. For those that haven't had the pleasure of meeting you yet, let's get a little background information and ask how long you've been in the mortgage industry and sort of what led you to this career path.
So I've been in the mortgage industry since 2003. It was my first job out of college. Really what led me, and I do feel it was a calling, so to speak. I'm a local guy. I grew up in Durham, went to Jordan High School, went to Duke University. Wasn't really sure, what I wanted to pursue. I knew I was headed in a financial services direction, but I wanted to stay local. Community is incredibly important to me. A lot of family here. I felt a calling to serve in some way in our community. And really, so I had an interview with at that point, a local brokerage group. And my first boss told me during that interview, the thing he loves about this industry is every night when you go to sleep, your ability to take care of your family and provide, the impact you've made on your community, the level of leadership and service you exuded, and ultimately the amount of money in your pocket is based on how hard you work that day and how hard you work to master your craft and become a subject matter expert, and the way you make people feel. And that ultimately people do business with people they like and trust. And I saw a very linear relationship with, mastering different aspects of this industry and being a servant in our community and ability to make impact. And it really spoke to me. And so really not knowing anything about mortgages other than my parents had one. And it happened to be an incredibly advantageous rate environment. This was during the big refi boom of the early 2000s. I jumped in it 2 feet first, was sitting in a couple's living room my first day on the job, explaining a loan application. And really, I learned very early on to just make friends, to be accountable, to be reliable, to tell the truth, all the good things we know we're supposed to do, and provide reliable resources and information. And this can be a very rewarding industry to be in.
That's several remarkable philosophies, but that you learned from the beginning, and you've managed to carry those on with Cross Country. It's also really nice to see a native Tar Heel, for someone that's lived in this area the whole time. You and I are a rare breed, sir.
There's not many of us left.
There's not many there. That's right. But it's good to connect with another one. That's for sure.
Absolutely.
All right. Cedric, this year, the headline for a lot of people in the real estate industry has been the NAR settlement, changes agreed upon in that settlement. From your viewpoint as a lender, what impacts have you seen since settlement agreement?
Sure. Well, I think so. I'll start with, I think this is our partners in the real estate industry's turn. I think we've had our turn as lenders, whether that be, Dodd-Frank, TRID, the different changes that have happened over the years. Even look at the last 2 years. There's no secret it hasn't been a very fruitful time, to be in mortgage lending. So we've had our challenges, and in each of those challenging times, we've relied on our trusted real estate partners to support us, through those relationships. And it's really, I think, an opportunity for us to step up from a lending perspective and support our real estate partners. Now, I think what we're seeing is the evolution. I think just putting more decision-making power in buyers' hands and going away from the status quo of expectations. I think those who do it the right way and are in it for the right reasons will achieve the same results. I think 6 months from now, if you're a new home buyer entering the market, you don't know that for all of history, it was an expectation that it was the responsibility of that seller to pay those fees. So it's just a change, an evolution, but specifically from a lending perspective, I see an opportunity for education, educating all of the The government agencies that insure loans have made various changes over the last year to be more accommodating, for instance, to buyers rolling in those fees in many instances, or even the ability to negotiate lender credits, which can serve that same purpose to go towards paying those fees, or even helping our agents negotiate seller credits, where that seller may not want to pay directly towards those fees, but if the home is priced accordingly and they can buffer in what they still need to make from a profit margin and offer seller credit, it achieves the same purpose. So a lot of it has been education. We have this conversation often, and we see it as an opportunity to educate our agents on there's creative solutions to achieve the same result.
I think with that education opportunity, like the more both people within the industry and buyers and sellers, the more they learn, it's been our observation that they get more comfortable as they learn. I think in that sort of in between stage, when not everybody was fully educated and not sure how to implement those practices, there was little uncertainty and unease. Do you feel that now that these practices are becoming more part of the routine, or your team, people they're encountering, are they more comfortable with the process?
Absolutely. There was a lot of angst and uneasiness leading up to the settlement. It was a new reality for all of us.
Yeah.
But I think now it's here. It's become reality. And we're doing what we do. We accommodate and we adapt and we change the times.
It's a universal thing, both in the mortgage industry and for the realtors, and from our observations. So I'm glad to hear that. Cedric, let's talk a little bit about mortgage rate movement. What have you observed is the state of rate for buyers and sellers right now? And what do you see taking place, the rest of 2024 heading into 2025?
Yeah, well, the interesting thing about this, and this has been a very popular subject lately, is as we know, the Fed cut rates 50 basis points last month, and rates have steadily increased every day since. And a lot of people want to understand why that is the case. Often that information is there's a delay in it being disseminated to the public. And so in reality, a lot of that rate movement was priced in 60 to 90 days in advance of that decision. And the market's already adjusted rates. Rates have been on a steady decline for several months. Now, what I think from an education standpoint as lenders, and what we can educate our clients, our realtor partners, and others, stakeholders, is that mortgage rates really follow the 10-year Treasury bond yield more closely than they do the federal funds rate. That federal funds rate really dictates the borrowing cost between banks of overnight lending. And, in prior markets, that's been a more linear relationship, and that's been an inverted curve for the last few years. And so really what we've seen as the economy improves, we see a flight from more stable assets like Treasury bonds to more risky assets, like stocks and other things. And we've seen a flight from those bonds as we see improved employment reports and we see inflation going down. And so that's really what's occurring. It's a good thing that reports show the economy is improving, but that has a different relationship with mortgage rates and longer term loans than some would think. Now, from an overall perspective, all of the smart folks, who do these forecasts every day are projecting that we will see a continual decline in mortgage rates. It's predicted that we will right now, the thought is we will end up somewhere around 6%. As of this morning, the average mortgage rate nationally is about a little under 6.5%. And that is based on 20% down, 780 credit score, paying some points. But we expect that to come closer to 6% by year end. And we'll see a steady decline in the next year and probably end up somewhere in the mid fives. And I think it will be a slow progression. I don't know if we will get back to the insane lows we saw in a COVID environment where rates were in the 2s and 3s, but we do expect it to normalize, where not only we will see rates drop into the 5s and eventually hopefully into the 4s, but the cost of borrowing will go down. Whereas right now, every rate costs some form of points typically. We expect to get in a normalized market where not only will rates drop, but the cost will go down as well. And, I'm sure we'll get into what we expect with inventory in the housing market. We're up 23% year over year, I believe. All those things will help each other. And we expect to have a very balanced market, especially locally. In our specific markets, we're a top 3 housing market nationally. So we've got a lot of catalysts in place that I think will be good for all of us stakeholders in the real estate market.
Well, that's a lot of good news. Hopefully a lot of things that you've mentioned and that the forecasters mentioned do come to fruition, and you can tell like you've got a lot of powerful insight that sort of helps shape your vision there. So that's good to hear. Cedric, when it comes to the mortgage process, what have you observed in your almost 20 years in the industry? What are the biggest misconceptions out there when it comes to navigating the mortgage process?
Typically that you have to have 20% down. You have to have a certain level of credit score. You have to have a certain level of reserves or down payment. There are creative solutions. There are a lot of different options. We're very big on community advocacy and being a lender for all and being accommodating to all situations. There, of course, are qualifications, but I mean, we're seeing this reemerge as the market strengthens. There's very creative programs where folks are qualifying off of bank statements, they're qualifying off of, especially self-employed folks with, 1099 income that typically is only looked at a certain way if it passes through tax returns. We're seeing a big emergence of DSCR loans, where you're qualifying based on a certain pledge rental amount and market conditions. So there's a lot of ways to leverage financing that fits for your solution, for your situation. So I think the message I would send is that if you're interested in buying a home, and I think more folks are and will be, especially as we've seen rental escalations happen, is to reach out to a trusted, loan officer or banking associate that can advise you of those options and really guide you through that process, because there's more options than most folks think.
That's great advice. Let's shift gears for a second here, Cedric, and let's talk about Cross Country's relationship with RRAR. Let's start with your team was a key contributor to the discussion we had earlier this year about serving the military community. So share some of the challenges that you've seen veterans face when it comes to home ownership and what the real estate industry can do to help our veterans.
Absolutely. So, obviously a community we want to serve, and that's, we try to start those conversations off with thank you for your service, first and foremost. Now, one of our teammates who leads the Cat Lady lending team, Crystal Vroman, who's been our liaison on this committee, she's a veteran. And she's very passionate about veteran advocacy. She currently serves as the president of the Raleigh Mortgage Bankers Association. And a lot of her lending platform is education, whether that be with our partners, whether that be on base. She splits her time between Raleigh and Jacksonville and is actively growing that market. And the bulk of her clients are veterans. And so she is very passionate being a veteran. And a lot of this comes from her story is the first time she brought a home, she didn't feel that she had an advocate to guide her through that process. And so she's very passionate about that. So she's done great in terms of educating me and our group in terms of ways we can make impact. And so we try to dive in. As you know, VA loans typically don't require down payment. So that is an incredible advantage. I would encourage every veteran to utilize their benefits, or at least research, what they can leverage from those benefits they've earned. There's a lot of solutions even after you get in your first VA loan in terms of advantageous refinance opportunities, through VA interest rate reductions. So there are a lot of mechanisms in place, to make sure our veterans are served. There are more forgiving debt to income standards and more forgiving, guidelines on maybe derogatory credit instances that could have happened while deployed. So VA is a very forgiving, accommodating, open-minded approach, I would say, to lending, and we try to lead with that. And we want to be the lender for all, and specifically, we want to lean into assisting our veteran community.
But I'll tell you, you and Crystal and the cross country team have done a great job advocating for veterans and homeownership. Her role in that forum that we held, we received nothing but positive feedback on the insight that both she and one of our board members, Tim Mott, also an Army veteran. Yeah. The insight that they both had to offer during that conversation, it's just been overwhelmingly positive. So thanks to you and Crystal for providing our members with something that was so helpful.
Well, we appreciate the opportunity to serve.
Yeah. All right, last question here, Cedric. We mentioned at the top here that Cross Country Mortgage is this year's sponsor for GPIC, our Government and Political Issues Committee. So share with us why it was so important to be a sponsor for GPIC.
We see it as the closest and most linear direct path to advocacy, where we can be stakeholders in those conversations and honestly educate ourselves, where we can hear from local politicians and other, trusted members of your organization. And we can provide that trusted lending perspective. But a lot of it is just that's part of our mission. Again, we want to be, as a company, the most referred lender in every community we serve. We're proud to say we're the top retail lender in the country. We do about 1 out of every 37 loans in America. And a lot of that, you don't get a referral unless you do a good job the first time. And part of that is education, advocacy, and being present. And that is a big thing for us culturally, is we want to be there. We not only want to contribute monetarily and in other ways of partnership, but we want to be in those meetings. We want to, offer trusted, sound advice. So it's really a passion. I think our teammates and I share is that advocacy portion of doing our part, again, and to whom much is given, much is expected. And we believe we've been very fortunate, and it's an expectation that we serve and be present for those type of things.
I think advocacy is one of the key things that our association offers as a true benefit to our members. I'm with you. It's great to have that access to our local government officials. So thank you again for your sponsorship for GPIC this year. Thank you for being a great sponsor for a lot of things we do here at RRAR.
Proud to do it. We appreciate the opportunity, and we will continue to do it.
All right. Thanks for the time, Cedric. We'll talk again soon.
Thank you very much. I appreciate it, Jay.